Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 2nd, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, what we can assess here in last week's trade is that the dollar has recovered. We have what appears to be a double bottom here on the dollar index around 88, approximately 88.50. Our signals from VantagePoint show that our medium-term trend is weakening against our longer-term trend, and it supports a further move up in the dollar. Now, the only thing that I'm seeing here is that we are well within the defined range on the dollar index. The top of that range at 90.60, the bottom part of that range at or about the 87.80 mark, and very little has changed here. Now, the event risk for next week is, of course, the non-farm payroll, and that payroll number will be a deciding factor for the direction of the US dollar. So I would anticipate mostly range trading ahead of that major announcement. The first look we're going to get into will be on Wednesday with the ADP report, which will give us a look, a window into potentially what that payroll number could be. We'll see volatility pick up around that time, but for now, I feel that the dollar will be contained by the 90.60 level, and very little has changed here. Now, when we see how this is affecting gold, that little bit of dollar strength here is pushing gold back down. Gold, again, with it also within a well-defined range between 1377 and the lower part of this range, approximately the 1300 mark. And again, with that little bit of dollar strength, we're showing weak. VantagePoint is clearly showing weakness in gold here. You can see we have the medium term crossing the long term predicted difference. But what I will point out is the predicted RSI is holding firm above the 40 level. Now, if gold is going to break out to the downside, we would need a break of that 40 level. But in my respectful opinion, we really need a break of the 1300 mark to really put pressure on gold contracts. But with the global uncertainty in the equity markets, in the different governments across the world, I don't think that anything is going to change. I think that gold is going to be well supported in and around that 1300 mark. Now, when we look at our equity markets going in, the S&P 500 for next week, we've got some pretty strong support here. We talked about this in the live training room this past week, sitting at the 2590 mark, and we have buyers coming in off this level. Once again, the medium term crossing the long term predicted difference in the opposite direction in which the market's been moving is a classic buy signal. Now, when we look at the resistance here, we do have some very stiff VantagePoint resistance here at 2690. In order for the S&P 500 to take the pressure off the downside right now, we need to break above this level and hold above this level, in my respectful opinion. But once again, when we look at some of the other correlated intermarkets, specifically light sweet crude oil, once again, we're in a well-defined range. We can see that the sellers stepped right in around that 66.60 mark, the top of the range. Now, what's interesting about the top of this range too is that it's the yearly high price. So when we look at this, oil is still firm. I will point that out. 63.68. We're closing the week at 64.94. Still some bullish sign here, but once again, when we look at the medium-term trend against the longer-term trend, combining that with the neural index, that does point towards still weakness in oil. Now, the RSI going sideways, so there's still a good chance that we could put a new high in on oil for the year, in my respectful opinion, that probably is not going to be until closer to May before we see that. Now, as we come into the major currencies here, Euro US under pressure as gold's under pressure. Remember when you're Forex trading how important things like oil, the S&P 500, and more specifically gold when we're trading the euro. So if gold is moving lower, chances are the Euro US currency pair is also moving lower. But we are still in a very well-defined range between 121.40 and 125.60 with a slight bias to the downside. Now, we can see our predicted differences here are very mixed. They're sitting right around that zero line. As we move lower below that critical VantagePoint support, 123.31, we're closing at 123.20, slightly below that on Friday. But remember, in holiday thin markets, right? So the Neural Index is still saying higher, so I think we're going to continue range trading. The immediate support that I can see down here is 122.40. I would anticipate we very well could test this level ahead of the payroll number. But again, with the euro, in my respectful opinion, we should be looking for buying opportunities against a weaker US dollar. Now, the same basic trade applies to US Swiss franc. So, when we look at the US Swiss franc, it mirrors the euro US. One goes up, one goes down. But again, we're inside of this very well-defined channel here. We can see that we're all bunched up right around this 96 mark here. We're not pushing any higher. But we've got good support at 94.84 ahead of the payroll number. So we're likely to see this pair remain firm. But to watch the direction on this pair, you want to watch Euro US, and you really want to watch gold prices. And again, the equity markets. If the global equity markets sell off, that pair is going to have a problem. This pair will have a problem. As we look at Great Britain US going into this week, once again, this past week in live training room, we were looking at shorting this particular pair. That's come to fruition, but we still have very heavy vantage point support down here at this 140.31 level. We're closing slightly below here, but again, Great Britain US remains locked in a range between basically 137.20 or so, and the top of this yearly high price here at 143.50. So we're smack dead in the middle of this range. Not the greatest area to trade this particular pair. Neural Index still says we have a little bit more downside, but we can assess here that after we've hit an overbought condition, but the predicted RSI is sitting at 39.3, so we are likely to see further downside, but it's more than likely going to be limited to this, probably down, I would say, between 138.50 and 137.50. Now, as we look at the dollar yen this week, this is the first time that we've actually been able to close 2 days in a row above the critical VantagePoint 18-day predicted moving average, or the long-term cross point. So when I'm looking at this, the only problem here is guys, we've formed a new trend line that's coming up about 106.80. I don't anticipate the yen to gain any real strength, or excuse me, the dollar-yen pair to gain any real strength. If we look at this from 1 year ago, and I will remind everyone that Japan's year-end is March 31st, so you've got some repatriation flows going there. But again, we didn't see any real recovery in this pair last year until approximately April the 17th. So I think that we have more downside on this pair, but again, if the global equity markets sell off, this pair will continue to move lower. But this is the first time we've had 2 days in a row where we closed above that critical level. But when we finish the day on Friday in holiday thin markets, I will point out, we still managed to close below that. So when we look at that 106.20, we're closing the week at 106.24. So basically right on that area. So I would still be looking at this pair as a sell the rallies. Unless we see a very, very strong payroll number, very little has changed with this particular pair. Now, as we go into USCAD for next week, we've got rock solid support here, guys. Visual support we can see at 128. Longs carry the edge while above 128. But if we lose 128, we would likely see a significant sell-off on this pair. Now, what we're going to need for that is we're going to need oil prices to really break through that 66.60 mark. I'm not sure if we're going to see that or not, but when I look at the Vantage Point indicators for this week, the medium term crossing the long term predicted difference right in this area here, that's telling me that, combining that with the 128.97 Vantage Point 18-day predicted moving average, if we can break through this level, that's going to push this pair back to the upside. But again, we need this level to hold. This is very visual support here. Price action never lies. We have buyers coming in at the 128, 128.15 area. And again, when we look at the individual crossovers from Vantage Point, we can see our short term is very mixed. And again, our medium term is down, and our long term crossover is down also. So if we get a better, not as good payroll number out of the US and a better one out of Canada on Friday, that I believe will be the catalyst to push this below. If we can push it below 128, that's what it's going to take. If we see it moving below that area prior to the payroll numbers out of Canada and the US, then that means basically we kind of smell a rat and somebody knows that number ahead of the release. So keep an eye on that very closely for next week. Now, our final two commodity currencies for next week, Aussie US, New Zealand US. Aussie US, guys, has absolutely massive support sitting just above 76.30, about the 76.50 area. It still has a bearish trend here, but the Aussie US is very correlated to not just gold, but the global equity markets. So if the global equity markets sell off further, then that will put downward pressure here on this particular pair, potentially forcing it down into the 75 area. But the medium term crossing the long term predicted difference is warning that the medium term trend to the downside is weakening. So we have to respect that. Our predicted RSI has managed to creep its way back up to 40.3. So we're not in a breakout scenario to the downside yet. But again, watch this pair. The catalyst would be a global sell-off in the equity markets. A risk-off scenario would put pressure on the Aussie. It would also put pressure on the New Zealand pair. So when we look at the New Zealand pair, very similar here. We've got a heavy, I can adjust this one here, this down just a little bit, this support level down just a hair, but I don't always like to do that. So when I see our most recent low point here, that's coming in at or about the 71.53 area, I believe we will still have buyers coming in at that level. We're failing at the 72.53, that key VantagePoint 18-day predicted moving average. But the predicted RSI, 46.5, just kind of going sideways. Now, this pair has been stronger. Of the commodity currencies, the New Zealand has clearly been the stronger one here, holding above its yearly opening price, but still potentially bearish in a risk-off scenario. So remember, we have a holiday short week here. Monday is a very thin illiquid markets, as I believe the UK and the European markets are out. So Tuesday and Wednesday of next week are going to really start to pick up, and we've got that major event risk on Friday, which is the non-farm payroll, which is likely going to set the tone for the US dollar for at least the next couple of weeks. So with that said, this is the Forex Weekly Outlook for the week of April the 2nd, 2018.